We have seen some strange and honestly unpredictable trends in the Raleigh real estate market this year. Is Raleigh now a buyer's market? Let's take a look. Here are the Wake County stats comparing April of 2025 to last year's market in April of 2024. And the first statistics that really stand out impact sellers the most. New listings are up 16% over last year and closed sales are down over 8%, which has led to an increase in inventory by over 60%. We had been struggling with low inventory for years, and even a little bit in the early parts of this year. But sellers are out in numbers now, with tons of listings hitting the market. The problem is that with closed sales down, homes are sitting for longer. As you see, the average days on market is at 22, up from 14 last year. There are simply fewer buyers out there, and of the ones that are, buyers are being very particular and picky. More on that in a moment. You'll also see the percent of the sales price to the list price has also declined to below 100%. Now, this is an average across the area, as there are still homes in very popular areas going for over asking with multiple offers, but that has become more and more rare throughout the year. And lastly, from an affordability standpoint, both the median and average sales prices fell from this time last year, which is a product of the lower demand we are seeing. This ultimately has finally brought the Housing Affordability Index back up slightly, and it's good to see that moving in a positive direction. For the different areas around the triangle, Cary is still the most expensive as a whole, with an average price of over $700,000 and a price per square foot of $277. Apex follows closely behind as the second most expensive location at $683,000 and $261 respectively. You will notice the curves flattening out just a bit, as we aren't seeing the record peaks rise to the extent of what they have in previous years, at least to date. Cary and Apex are also receiving offers below their original list price on average for the first time in a while. So while again, certain homes may still go well above asking price, most homes are going around or just under asking. On the more affordable side, Clayton continues to lead the way with an average price of $380,000 and a price per square foot of $192. Clayton has been hovering around the 190 square foot range for a while now, and it's bound to begin increasing, but for now, it remains affordable for the area. You will also notice Fuquay-Varina on the rise over the past year, really closing the gap between it and Wake Forest at nearly $500,000 for an average price and $212 a square foot versus Wake Forest at $560,000 and $217 a square foot respectively. Fuquay is putting up new construction housing left and right, which is really attributed to this price increase. And from Wake Forest's perspective, it's also been pretty flat over the past couple years, as the number of higher priced new construction homes has decreased after the boom that took place around 2020. And if you want to see homes in any of these locations, our team would love to help you. So I mentioned this at the beginning of the video. This has been a really odd market. It's been changing fast, whereas at some points it seemed like the surge in demand was here, only for it to quickly slow down again during what is typically the most popular real estate period. Why is this? Much of it can be attributed to what's happening in the world right now. The stock market has been a roller coaster, and the interest rates keep teasing us by going back down and spiking right back up to 7%. With the economic outlooks changing constantly, this uncertainty naturally makes some buyers who are on the fringe of buying become more hesitant or decide to just let the dust settle before getting in on the market. So what impacts has caused this? As we saw earlier, closed sales are down even with more inventory to choose from. So demand as a whole is down, meaning competition is also down. Many homes that over the past few years in a spring market would have been under contract the first weekend are sitting for over a week despite getting a ton of showings. Buyers are asking more questions, being picky about things that they haven't had the luxury to be picky about in years, and overall do not feel the urgency to submit offers. This doesn't mean good quality, well-priced homes will not sell, because they will in time, but some are sitting longer than we've seen over the past few years and not always getting your full asking price. Also, another odd trend is that luxury homes many times are in higher demand than the more affordable homes in the area. This is largely due to the fact that those who have a higher budget aren't quite as worried about the higher interest rates and or are dealing more with cash, whereas those who are in the market for more affordable homes are many times first-time home buyers who are more affected, relatively speaking, by the higher interest rates and fluctuating economy. And lastly, there are lots of contingent offers coming in, which is another another byproduct of lower demand, as in a more competitive market, buyers wouldn't even bother submitting an offer contingent on the sale of their home. So what does that mean for you? If you're looking to buy, it's actually a good time. There's quite a bit out there to choose from, and the lower demand allows you to take your time and make a well-informed decision. If you're looking to sell your home, I wouldn't go in with the expectation of multiple offers in the first weekend. Your home will still sell and will sell at a fair price, but it is critical to price your home right from the beginning. And don't stress if your home is on the market for several weeks, as the slower pace of buyers has prolonged the days on market. Check out our latest video on the pros and cons of Raleigh's best neighborhoods, and thank you for watching.